Most traders fail, not because they lack intelligence, but because they misunderstand the rhythm of the market. They chase every tick, panic at every reversal, and trade news like it is gospel. Jesse Livermore knew this. Well, the market does not care about your feelings. It moves according to its own laws, and only those who respect them survive. Picture this. A young trader sits glued to the screen, watching candles flicker like a heartbeat. Each small gain or loss twists his emotions. Fear tightens his chest. Greed urges him to double down. He enters and exits without pattern, thinking action equals profit. By the end of the week, his account is battered. This is the fate of 99% of amateurs. Livermore's approach was different. He watched the tape. He waited. He learned to read the trend, the pivot points, the signs hidden in market behavior. One of his core secrets: the market speaks in cycles. There is a rhythm, often captured best on the 4-hour chart. Trade against it, and you lose. Trade with it, and the probabilities tilt in your favor. Consider the pivotal hour, a concept Livermore described in his notes. This is the period when trends confirm themselves and large operators position themselves. Amateurs ignore it. Professionals plan for it. They know that the right 4-hour window is not just a time, it is an opportunity to align with the market's flow, to let positions develop, and to enter with confidence rather than fear. Maxim: the big money is not in the individual fluctuations, it is in following the rhythm of the market. Amateurs overload themselves with charts and noise. Professionals focus on one thing: the trend, the confirmation, the signal. They size positions according to risk. They respect stop losses, and they wait for the right moment. And here is the counterintuitive truth. Sometimes the best trade is the one you do not take. Doing nothing, when the market whispers wait, is more profitable than frantic action. By the end of this chapter, you will understand why the 4-hour mastery is non-negotiable. You will see why ignoring this rhythm costs thousands, and how one simple adjustment, respecting the market's timing, separates the winners from the losing crowd. Soft cliffhanger: in the next chapter, we will uncover the first actionable rule that every professional trader follows, a rule that turns the elusive 4-hour rhythm into your most reliable edge. Many traders believe timing is luck. Jesse Livermore would call that nonsense. Timing is the foundation of profits, and the market has a rhythm, a pulse that, when understood, separates amateurs from professionals. The 4-hour chart, in particular, reveals that rhythm. It shows when trends confirm, when consolidation ends, and when the market is ready to move decisively. Consider a trader named Mark. He spotted a breakout on a 15-minute chart and rushed in, thinking he had uncovered a fortune. Within an hour, the market reversed. Frustrated, Mark blamed volatility. What he failed to see, the 4-hour chart was forming a pivot, a zone where price had to confirm direction. If he had waited, the probability of success would have doubled. Livermore's method was simple but disciplined. Identify the primary trend first, always on the higher time frame. Let the lower time frames fine-tune entries, but never contradict the dominant rhythm. Professionals use this approach to size positions, set stops, and determine when to pyramid. They don't gamble on impulse, they calculate. Here's a paradox many never grasp: the market will often offer fake signals designed to test your patience. Amateurs trade every one, thinking activity equals success. Professionals wait. They understand that waiting is a position, a tactical move that protects capital and aligns with probability. Maxim: align with the rhythm, or be carried by chaos. Pattern interrupt sometimes. Doing nothing is the most profitable action. Watching price unfold and respecting the 4-hour signal avoids costly mistakes. This is counterintuitive for beginners who equate effort with results, but Livermore knew the value of patience. The market rewards those who wait and punishes those who chase. Seated clue: notice how every major move, every decisive trend, follows this higher time frame alignment. Tomorrow's winning trade is already set in motion if you recognize the rhythm today. Soft cliffhanger: in the next chapter, we will confront the silent killers of trading, fear and greed, and explore how aligning with the 4-hour rhythm neutralizes them, turning psychological traps into predictable outcomes. Jesse Livermore often said, "The human side of trading is the most dangerous. Fear and greed are not just emotions. They are predators that strip profits from the unprepared. Most traders lose because they act under their influence, reacting to price swings rather than the market's rhythm. Professionals, however, use structure to neutralize these forces. Consider Sarah. She saw a sharp breakout and rushed in, doubling her position out of excitement. Within minutes, the market reversed violently and she lost 40% of her capital. Fear of missing out and greed for quick gains had dictated her moves. Livermore observed this countless times. Impulsive traders are always at the mercy of the tape. Now contrast with the disciplined professional. The 4-hour chart is her anchor. She identifies pivotal points, sets her stops, calculates position size, and only enters when confirmation aligns. Pyramiding is never emotional. It happens only when the market proves her judgment right. Risk is controlled, and patience is weaponized. Protocol: before every trade, ask 3 questions. Does the 4-hour trend confirm this setup? Is my risk defined and acceptable? Will adding to this position honor my plan? If any answer is no, step aside. Doing nothing is a valid strategy, not a failure. Professionals understand waiting is a position. Story interlude. John once saw a promising trend early. Nervous, he hesitated. Instead of exiting, he reduced his initial size and waited for the 4-hour confirmation. When the trend confirmed, he added gradually, turning a modest position into a substantial gain. Same market, same volatility, different outcome because patience prevailed over impulse. Maxim: fear and greed are loudest when you trade without time on your side. Counterintuitive insight: the best trades often come from restraint, not action. The amateur flails, the professional waits. Livermore's genius was knowing when to act and, more importantly, when to sit. Every lost opportunity teaches discipline. Every well-timed trade compounds it. Soft cliffhanger. In the next chapter, we will translate this psychological mastery into tactical mechanics, position sizing, entry, and pyramiding, so that patience and discipline convert directly into profits. Jesse Livermore always emphasized, it is not the market that beats you, it is your lack of discipline. Most traders fail because they mismanage position size, enter impulsively, or pyramid recklessly. The market punishes ego, and only those who respect risk survive. Position size is the foundation. Never risk more than 1 to 2% of your account on a single trade without clear confirmation. Amateurs ignore this rule, often doubling down out of emotion. Professionals calculate risk in advance. They know that controlling losses is more important than chasing gains. Livermore called this the law of survival: protect your capital above all else. Entry is next. The 4-hour chart defines trend and pivotal points. Lower time frames are for refining the entry, not for overriding the primary signal. Every trade must feel right before committing. Impulse trades, chasing small moves, only guarantee losses. The professional waits, watches, and enters with probability on his side. Pyramiding, the art of adding to a winning position, is where amateurs ruin themselves. They jump in and out, spiking emotions and risk. Professionals add, cautiously, incrementally, only when the trend confirms itself. Think of it like stacking bricks. Each addition reinforces the structure, never destabilizes it. Scenario: David identified a 4-hour uptrend. He risked only 1% initially. As confirmation persisted, he added positions incrementally, never overexposing himself. By the end of the session, he had tripled his gains without stress or panic. Same market, same volatility, different result because discipline governed his decisions. Maxim discipline compounds profits faster than intuition ever will. Counterintuitive lesson: the best trade is often the one you never take. Waiting for the 4-hour confirmation, respecting risk, and sizing positions correctly prevents catastrophic losses. Doing nothing when conditions are unclear is a strategy, not failure. Soft cliffhanger: in the next chapter, we will integrate all of these principles into a daily framework that turns timing, psychology, and tactics into a systematic edge. This is the hidden structure that separates professional traders from the 99% who fail, and it is where Livermore's methods reveal their true power. Jesse Livermore knew that knowing the rules wasn't enough. Success came from integrating rhythm, psychology, and tactics into a disciplined daily routine. Professionals don't react. They plan, observe, and execute with precision. Amateurs, by contrast, chase every candle, every rumor, and every tick, never realizing they are fighting the market's natural flow. Step 1. Begin with the 4-hour chart. Identify the trend, pivotal points, and potential breakout zones. Look for patterns that signal confirmation, not conjecture. This is your map. Without it, every trade is a guess. Step 2. Define risk. Calculate position size based on account percentage. Establish stop losses. and determine your pyramiding plan. Every decision should have a clear if-then structure. Livermore emphasized never gamble, always calculate. Step 3, wait. Patience is a position. Let the market reveal its intentions. Observe the price action, watch how it interacts with the pivot points, and confirm the trend. Impulsive traders mistake waiting for inactivity. Professionals see it as strategy. Step 4, execute. Enter only when confirmation aligns with your plan. Add to winners incrementally, respect stop losses, and never let greed or fear dictate action. The market will test your discipline. You must remain unshaken. Scenario: Lisa checks the 4-hour chart in the morning and identifies a potential breakout. She reviews risk, calculates position size, and waits. Hours later, confirmation occurs. She enters with controlled risk, pyramids carefully, and exits with a solid gain. Stress-free, methodical, and profitable. Same market, same volatility, but the difference is a system. Maxims to remember: wait for confirmation, trade with discipline, cut losses fast, size small, own your process. Patience is strategic, impulsiveness is costly. Counterintuitive insight: every missed trade is a lesson, not a failure. The market rewards discipline repeatedly and punishes impatience mercilessly. Professionals thrive because they align every action with rhythm, psychology, and tactics. Closing: integrating the 4-hour mastery into a daily routine transforms trading from guesswork into calculated probability. If you follow this framework, you will reduce stress, protect capital, and consistently tilt the odds in your favor. Bridge to next lesson. In the next video, we will explore scaling these principles across multiple markets, multiplying your edge without increasing risk, a professional skill few ever master. Jesse Livermore understood that mastering one market was not enough. True professional traders scale their principles across multiple markets, multiplying their edge without multiplying risk. Amateurs, however, dive recklessly into every market they see, over-leveraging and chasing opportunities blindly. The difference between the 1% and the 99% is strategy, not luck. Step 1. Identify markets that move in rhythm with your preferred time frame. Livermore often favored markets where trends could be read clearly on higher time frames, particularly the 4-hour chart. Patience matters more than quantity. Choose 2 or 3 instruments and study them like a map. Step 2. Apply the same daily framework you've mastered. Review the 4-hour chart, define risk, wait for confirmation, and execute only when signals align. Risk management remains absolute. Never increase your total exposure simply because there are more markets to trade. Professionals add breadth only after they have confirmed consistency in execution. Scenario: Michael trades stocks, futures, and commodities. He applies his 4-hour rhythm strategy to each, but sizes positions according to volatility and correlation. When one market presents a strong trend, he prioritizes it. When another lags or shows noise, he waits. Over time, he compounds gains steadily, without stress or impulsive losses. Same principles, different markets, same results. Pyramiding across markets is no different. Livermore warned, never treat multiple positions as independent guesses. Scale only when trends confirm and risk is contained. Adding exposure indiscriminately invites ruin. Maxim: the market rewards disciplined expansion, punishes reckless ambition. Counterintuitive insight: more opportunities do not mean more profit. Often less is more. By limiting focus and applying the 4-hour rhythm consistently, professionals extract higher probability wins and maintain mental clarity. Soft cliffhanger: now that you understand how to scale and compound your edge, the final step is integration, creating a personal rulebook that aligns timing, psychology, and tactics into a repeatable system. This is where Livermore's true genius lies, not in chasing profits, but in building a method that survives any market condition. Closing: if you follow this approach, study rhythm, control risk, respect psychology, and scale judiciously, you join the 1% of traders who consistently survive and thrive. The market will test patience and discipline, but with these rules, you turn its chaos into opportunity.